So kia ora koutou and welcome everybody. For those of you I haven't met, which I don't actually think is anyone on the call, I'm the Head of Climate Action here at SBC. Thank you very much for making the time to be here today. It's really good to see all of you here. I know a number of you are coming to multiple of these workshops, and these are really busy times and the juggle is real, particularly for those colleagues in Auckland. So we appreciate you making the effort. As you'll be aware, this is one of a series of sectoral and thematic workshops that we are hosting for SBC and CLC members to help shape our collective response to the ERP discussion document and inform our next, which will be our next draft, which will be the final one. We'll issue that next week for any final comment ahead of the deadline for submission on the 24th of November. Agencies have confirmed that there is no plan to consult on an actual draft ERP. So as at now, this is it. This is our chance to be really clear on what we think is needed to close the ambition gap that is presented in the discussion document between the emissions budgets and the policies that the government currently has planned, and get the transition underway in earnest. So I will just share my screen to bring up a brief outline of how we're going to run this session today to give you an overview. Caller, can everybody see that one?
Still black. It's just loading.
Is it coming up?
Yeah, it's just come up.
Yeah, good. You can see the slides. So this is a session where we'll focus on 4 cross-cutting issues. It'll be firstly about the business government interface, a section on research, science and innovation, funding and financing, and emissions pricing. We're planning on running things sequentially, having realised that any kind of concurrent breakout type structure would mean that people might miss out on topics they'd be interested in talking about. There is time, as you'll see, for presentation from us, from our side, so I'll do part of it and then I'll hand over to Toby, and I see Karina's on the line as well from Sapere to present other parts. So there's time earmarked for discussion, but this is your session. So if there are any questions or comments you want to raise during the course of presentation, just please feel free to use the raise hand function to enable that conversation. As you would have seen in our early comment on the ERP discussion document, and you would have already heard multiple times if you've joined our other workshops, the ERP discussion document wasn't a draft plan. The policies it contains fall far short of meeting their budgets, as I mentioned, that the Climate Change Commission has recommended. So by and large, we're focusing through this ERP response on rolling up our sleeves and developing some concrete proposals that will achieve and enable meaningful emissions reductions and ideas that are readily translated into policy. With these cross-cutting sections, they obviously won't directly result in emissions reductions per se, as some of the concrete suggestions that we're framing up for our sectoral chapters will, but they will be crucial for enabling the transition. So maybe then to just kick us off, I will start talking a little bit about what we're calling the government business interface. I should say at this stage that this sits within the section of the report that's entitled Meeting the Net Zero Challenge. So this starts at page 37 of our draft response, which we circulated last week. We would of course welcome feedback on the other parts of this section too, but this is an issue which we'd really appreciate your feedback on as our members. I suppose first, by way of background, we've been talking a lot about over the past year about partnership or close collaboration between business and government to enable the low carbon transition. And members have been fairly united in the view, and very sensibly, I think, that it's up to the government to set the policy parameters and pathway, and private sector will then come in and help deliver the transition. The question we've been asking ourselves through this process is, how do we make this as meaningful and seamless a relationship as possible? What is the most workable structure for that interaction that ideally allows business and government to work in lockstep, planning and delivering the transition, but doesn't create unduly burdensome structures or processes? The question that I often ask myself is that even possible? So that's why we're opening it up for your feedback. So maybe just first to touch on the history here. So we asked of the Climate Change Commission that they recommend a partnership be developed between government and business to support the development and implementation of the ERP. The Climate Change Commission picked up on this in its final advice, saying the government should work in partnership with business and leveraging business leadership, etc. The ERP discussion document doesn't quite go that far. It talks about the government not being able to achieve emissions reductions alone, and talks about the collective effort required to build a low emissions economy, and everybody having a role to play, which I don't think anyone could really argue with. But I suppose what we're wanting to do through our response is take our thinking beyond the abstract and into the realm of the concrete. So we've said that business and government need to collaborate closely. How do we do that in practice? So a number of different options have been floated for how this, by members at various times, for how this could work in practice. And I've listed some of them here in the draft response for your feedback. So where we've landed at by way of draft headline recommendation, and this is very much just a draft, is thinking that it might make sense for the government to establish some kind of climate business advisory group that could potentially be at a chief executive level in order to plug directly into the Prime Minister's Climate Change Response Ministers group, so that you have business leaders talking directly to political leaders. Potentially you could have that supported by working level sectoral groupings that actually do the mahi intercessionally. But that is just one of a number of options. We've heard a social enterprise model could be considered. You have accelerator or incubator type models for specific challenges, or in fact, you just don't have any one overarching approach. You just take it sector by sector and see what works best. So I suppose I'll stop there and pose to you the question: how can business organise itself to get what it needs from government most effectively and efficiently? Where is the sweet spot of something that is low overhead yet high impact? And how much time and effort are you and your business is willing to invest in a workable interface with government? So I'll park it there and open it up for any questions or discussion. Or there may be none.
I'll jump in again to kick this off.
Save the day once again.
No, you always be the first one. I'm not sure if I'm speaking out of step here, and if we're going to have another session on the innovation, or is this all in one discussion?
So I think Toby will, after we've talked about this particular issue, will then present on the science and innovation side, and then we'll have a discussion on that. But hey, feel free to jump in.
Perfect. In that case, I'll just pass, because that's what my point was about. So I'll let somebody else jump in with the business government piece.
So I'll open it up for questions or comments on that. But equally, if there are none, if that's not something you've thought about or you have a strong opinion on, that is helpful feedback for us too, that it doesn't. Hello, Tom. How are you? Come on in.
Good. Oh, you found, I must have moved my microphone and made a noise, but I was planning to speak. Having looked at this, you pitched the idea of sprints or working on individual things. It's quite difficult to work out the entire interface on every element of transforming the economy, but I wonder if there might be easier bits that could be picked up. And I think the just transitions space is probably the simplest one, because it's the least controversial in terms of it's starting from scratch and it doesn't have particular impacts on particular industries. Whether a way of working could be modeled around particular issues or particular parts of the problem, and we could learn from that, rather than trying to design a whole interface, whether one piece of work could lead the way as a way of working.
That's a great idea, like a pilot of sorts. Great, I'll note that down. Are there any other thoughts on that particular piece? Tom?
Kate, I think that we've shown through the low emissions freight working group that we have a collective and an understanding that's worked to date, albeit we're still ironing out, what next and how we're doing it. But I mean, that shows a committed collective of businesses that are liaising with government, and I think the response from government was really good in terms of when we launched at Toll however many months or so ago. So I think that shows a structure that works. So yeah, I think if it can work for what's arguably a really difficult industry to decarbonise and pull people together, I think that we could perhaps try and mirror that for other topics. And I think too, we're seeing the low emissions vehicle working group, or there's another group that's coming along. So I think that, yeah, we should look to try and mirror something that's already working.
Great, yes, and thank you for raising the freight example. I think that's a great example. And so essentially there you're talking about a model where a business grouping or a sectoral grouping comes together around a shared challenge, and an industry-led pathway is developed, and then that group becomes kind of a de facto go-to touch point or reference group.
I mean, it may not necessarily tick the low overheads or minimal resource required to do it, but I don't think any solution that we need now is going to really tick that box. So yeah, I think it works. A shared a collective response, and yeah, industry group's great. Yeah.
Thank you for that. That's really helpful. Any other thoughts? I see we have a couple of MFE officials on the line, which, I mean, you're probably here just to listen, but you are also an associate member of SBC. So welcome any thoughts that you might have from your end on what might be workable. Hi, Belinda. Sorry to put you on the spot there.
Hey, sorry. No, we were just wanting to lurk and listen. But no, look, I think from my personal perspective, rather than representing MFE in this, I mean, I think the finding new ways of working and amplifying those things that are already working is going to be super important. And I think a lot of the discussion I've heard around is how can government policy help get us there? And I think the questions that you're asking in this are absolutely crucial. Like, what's the role of the private sector in driving a lot of this? Because private sector has a very different operating environment. But what are the ways that we can drive together? So I think the idea that through the submission you're going to amplify the things that you think are working and could be brought forward at scale and pace is going to be really critical to hone people's thinking around the action piece rather than just the longer term policy piece.
Sure. Thank you. Great. So I'll open it up for any final thoughts or questions. I think that there will be quite a bit to discuss under the other items, so I don't want to unduly prolong this part of the discussion. Last call for any questions or comments on this piece before I pass to Toby, who's going to talk about research, science and innovation. No takers? Toby, I think the floor is yours.
Thank you, Kate. Is my mute off?
It is indeed.
Oh, happy days. Let me just get my my slides up. This should be quick and painless. All right. Thank you, everyone. It is nice to see everyone on the call. So the first section that Kate asked me to address was research, science and innovation. And I only have one slide, which I'll now reveal to you. So what this slide does, it goes back to what the Climate Change Commission talked about. And I think that it's an important slide. It's an important point to go back to what they said. And there at the bottom, we've got the SBC CLC headline recommendation. And what we read in the ERP discussion document is, sorry, I had it up. I had it ready and I have now lost, now let it go. No, it's, damn it. Just bear with me, everyone. I'll be there in a moment. No, I was on the right page. So the questions that the climate change, the question that the government asks in this section are quite vague, and what we are hoping for in this document is to focus on things that are more specific and more quantifiable, more additive, more specific, quantifiable, and additive. That's the phrase I'm looking for. So the two recommendations that we have there are much more consistent with, I think, that the way the Climate Change Commission had framed the Research, Science and Innovation Challenge. One was to look at the proceeds from the ETS and recycle those into research and innovation. And the other, which has only got one line here, is the idea of turbocharging research and development in the agricultural sector, or specifically methane. And that's a proposition which says that not just optimizing the current set of arrangements, but actually going much larger in scale and looking at what can be done in reducing methane. What we need from the group is, are there any other specific things that fall into the research, science and innovation bucket, if you like, that we could do that would be clearer than the questions that have been asked and the way the consultation document has framed our research, science and innovation, and are more additive. And that's really the whole question. I don't want to go through all the mechanisms that are in the document here. There's a number of existing mechanisms that are already mentioned, and those get subject to review from time to time. What can we do that is clear and additive to what's explicit and implicit in the consultation document? Lincoln, you'd like to go first.
Hi, yeah. I'm not sure if it's additive, explicit or implicit, but just acknowledging the role that industry does have to play in driving innovation and making sure that government procurement, so I was in an alternative one the other day, I think Kate Jewell, so the energy one, and they were talking about driving consolidated government procurement cycles, which from some lenses does make a lot of sense. However, those large consolidated deals tend to go to the large players and lock out smaller innovators, who haven't maybe yet gained the scale of Becker or a large entity. Not knocking Becker in any way, shape, or form. So just in terms of encouraging industry through mechanisms around R&D grants, which obviously exist, but even it's competition entries, reward and recognition mechanisms to foster that innovative community out there, which will drive not just our kind of first wave of changes, but also drive a sustainable economy behind it. So I'm not entirely sure how to word that, but it's really around recognising the balance of fostering innovation through reward and recognition versus kind of government procurement contracts in particular.
Lincoln, thank you for that. One of the things we find with a lot of existing institutional arrangements in New Zealand is that they don't necessarily have all have emissions outcomes as part of their criteria. So research and development focuses on a number of things. And what we need to do is to add into the criteria for all of those grants, investments, and so on, and the emissions implications of it. Is there something about incorporating the emissions reduction imperative into the criteria for allocating procurement? Is there something there about how you frame the criteria?
Yeah, actually, it's a really good point, and certainly something out of the document that's being prepared is to some degree inclusion, but also framing it in that dollars per tonne is super helpful, because we can start establishing those benchmarks and identifying the where in the MAC curves or stack essentially that these things fit, so that the trade-offs can actually occur. So I think you guys are doing a good job around that, and I think yes, that could be enhanced and brought out as something that for inclusion, but also establishing those benchmarks as more of that common terminology. Okay. But we've certainly found that quite interesting and helpful for us.
Thank you, Lincoln. Prageeth, you're back.
Yes, I am back. And this point actually also relates slightly to the previous point that Kate brought up as well. And I'd like to bring up a concept. I'm not sure if many of you are familiar with Climate KIC. It was the European Union's largest fund for climate change, for fighting climate change back in 2010. And when I was living in Europe, we were kind of asking these same questions, about 10 years ago. How do we leverage research, science, and innovation to enable, the transition to a lower carbon society? And I think the Climate KIC model, which I'll put a link in, was quite effective. I mean, they did pour billions of euros into it. It's the biggest EU project. And what they tried to do was fix what's known as the sustainability innovation pipeline. So the issue was, at least back in 2010, when you have a sustainability startup company or a new project idea and then an unsustainable competitor, the unsustainable competitor would always tend to win. So they tried to clean this pipeline. And what they wanted to do was get everybody on board. So you have kind of the academic institutions that are developing a lot of the technologies. There is the first leak between academia to the startup companies that actually end up leveraging this into products. That's the first leak. The second leak was that kind of startup drive to the investors. You know, how do you get the right investors on board so they're able to provide guidance early on so that these kind of concepts could actually have investment potential? And then the third stage was, how do you then take those ideas that have then been invested and get them into the expansion sales from the large companies? So the way to fix that innovation pipeline was to get all the key stakeholders all together under one institution, and this was Climate KIC. So you had academic partners on one side, you had the incubators, you had investors, and you had the large companies that would then purchase these small companies at some point and scale them across the continent. So it was quite effective, especially back in 2010, because back then it was all about developing all the technologies. And now we have the solar, we have the batteries, we have all these quite epic technologies that come into action, but then there's of course still more. And I know back in 2014, we came back, a few of us came back to New Zealand and tried to expand this within Aotearoa, but didn't really gain that much traction back then. So I would be quite interested in seeing whether there is an opportunity again to rethink and maybe even use this as an opportunity to draw out this quite successful model that's already been trialed and tested in Europe, and see whether the government would be interested in, instead of just throwing money into research and trying to close that pipeline. And the SBC and CLC fits really nicely because we're the last piece of that puzzle, right? And if we can say we're interested as industry to be part of this, tie in all the other key stakeholders, there could be quite a lot of value. And conveniently for us, the CEO of Climate KIC was a New Zealander who's returned back to New Zealand. So he's hanging around. And he also has just kickstarted a very small light scale version. I'm not sure if anyone from Auckland Council or Auckland Unlimited is here on this call, but they are trying to prototype a very light version of this locally within Auckland, which Victor is part of. So I'm quite interested in seeing whether there is an opportunity for the government to take this on and potentially expand this into a national project.
Kate.
I was just going to come in and pick up on that very good point, Pagi. So thank you for raising that, because I wondered if thank you for raising the Auckland Innovation, the Climate Innovation Hub in particular at the end there, because we have had as SBC a little bit to do with that organisation, which is obviously just setting up now, and so hasn't really been road tested yet. But knowing that it's modelled on, at least partially on the Climate KIC or Climate KIC model from Europe, which, as you point out, has been really successful. It would be interesting to know if there are any views from those around the virtual table on that particular institution, or any other ideas about that sort of innovation hub type model and how that might be rolled out at a national level, and indeed the kind of the merits of doing so. So yeah, I think that's a really great point. I just wanted to support it.
Does anyone else on the call, as Kate says, does anyone else on the call see that as an idea that's having legs in terms of offering a clear way to add significant uplift to R&D and innovation in reducing emissions?
Yeah, I'd also just like to add now on behalf of Vector, so I'm also the sustainability GM at Vector. We have huge internal interest in this because, you know, we're trying to design what we call the new energy future, right? So a digitalized version of the energy system that will enable a lot of, you know, large scale decarbonization. But we need to somehow empower the greater society to create the businesses that sit on top of this, you know, design the new demand side response technologies, design those, you know, new smart plug interfaces that enable for renewable kind of grid management. And we don't have the capability to take on the risk of innovation directly as a large company. So I think we have internal vested interest in watching this succeeding, watching these, you know, New Zealand research technologies come into practice.
So Prageeth, who would we be asking to do what? Is it an initiative that SBC would lead, or is it something you'd be asking an MB or someone like that to drive?
This might be a better question for Kate, but if I throw in 2 cents, in Europe it was government led. So the government led by putting in the research and innovation funding for it, and the large companies like the SBC companies would come in as partners. They may, in some models, I mean, in the European model, they didn't have to contribute in kind, but I think later on they started realizing there was value in the large companies contributing some sort of in kind as well to support it. So it's not entirely government funded, but it had to be started by the government.
Kate, you've been invited to address that. So seriously, Kate, the question is, how would we frame this? Is it a you government should do this, or is it a we the private sector would participate in something that looked like this?
Yeah, and I'm loath to take airtime away from members because this is really your session, members on the call. But I mean, one could imagine that it could be a hybrid approach, right? That it's a government-hosted entity, like Prageet's suggesting, where business comes in as partners or help form, a steering group around it. I guess the key question is, where does the funding come from? And if we've already got the recommendation of hypothecation of ETS revenue into research, science, and innovation, that seems like a natural income stream. Then it seems we could, through our submission, propose a model whereby it is, say an MB hosted thing with certain business groupings or particular businesses as partners, and see how it unfolds from there, rather than being overly prescriptive.
All right, that's a good guide. Does anyone else on the call want to jump in on this? We've got that concept which we can develop. Does anyone else want to come in?
No, I support that, Kate. I don't think we need to get too technical or prescriptive. I think that the idea, as Prageet sort of posed it and you sort of summed up, works really well. I think the funding element coming from government is important, and I think then if you open it up to industry and a request for industry partners and interest, I think that you certainly have a lot of people and businesses wanting to be involved. So I know that from the warehouse group's point of view, it'd be something that would be interested in. So I think we know enough to be able to put something in the submission. Would support that.
Thanks, Tom. Emily, I see you're unmuted. Was that because you wanted to ask a question or make a comment?
Just to also throw in support. I don't have particular experience of it, but as Prageet said, Climate Kick has worked really well in Europe. And it makes sense to sort of build on a known model. And yeah, your summary sounded great.
All right. I think does that constitute a mandate, Toby? We'll frame something up along those lines.
Well, if everyone else remains silent, then it is a mandate.
Speak now, forever hold your peace.
Unless anyone else wants to come in with a different perspective. And it's certainly, but my comment was, it's not inconsistent with the way we're thinking about the methane research concept, and it certainly would put more shape to the recommendation as it currently, the draft recommendation as it currently stands.
And one other key advantage of following the European model is that they are open for international partnership if any other countries follow their model. So when we tried to bring this back in New Zealand, the idea was to scale New Zealand businesses in Europe. Unfortunately, the government at the time didn't take it on, but the Australians got it. So the Australians are already involved in this partnership. So they're basically, if we were to do this as well in New Zealand, any company that ends up becoming quite successful in New Zealand because of that European partnership, it makes that European scaling. I mean, in reality, we are a little bit isolated. And having those, key networks and key partners will enable our internal science innovation to also scale within Europe. And I think that's a big win for the government if they were to get that working cleanly.
You do a great job of selling the concept, Prageet.
I've been pushing this for years.
Great.
Kate, we're not getting anyone else wanting to either contribute to this concept or to pursue any other concept in terms of initiatives the government could do to beef up research, science and innovation with reducing emissions in mind. I'm just going to read one of the questions just before we go off this topic. I'm not sure what my time schedule is. This question asks, what are the opportunities for innovation that could generate the greatest reduction in emissions? What emissions reduction could we expect from those innovations, and how could we quantify it? And I just want to hover over that question before we leave this whole subject area. And so we're looking at R&D in methane. Are there other areas where we have a comparative advantage, or where we have a particular exposure in New Zealand, or anything like that, that we could actually identify as being areas for more support for innovation that would lead to lower emissions? Prageeth has already mentioned a few in the building and construction area, which was very useful.
Toby, pending anyone wanting to comment on this, one observation I would make is that this is something that does emerge in the other sectoral chapters that we've been working on. I'm thinking about the transport session we had on Friday and the discussion around hydrogen. And obviously there's an element there around government support for research and innovation into the role of hydrogen to realise its full potential. So I suppose it speaks to the limitations of looking at this issue in isolation out of the context of the actual sectoral the grounding of the sectoral context. Anyway, but I said probably to come in again.
Yeah, sorry, I'm taking up a lot of screen time.
No, it's great.
One other item that I think is not really talked about, but it could be potential, is just how the energy sector, right? We have the opportunity to be world leaders in this space. We are already really good with our generation capability and how renewable we are. If, for example, Victor's problem is the fact that Auckland City itself is partly the reason why we still have Huntly. And whenever, I talk to my friends in Genesis and tell them to shut Huntly down, they say, well, you need to sort out Auckland's energy problem first. So, and this problem is kind of endemic across the world. There's so many equivalent cities like Auckland that have their backup coal generator somewhere. So being able to transition beyond this requires what we in Victor call the digitalization of the energy sector, the ability for, instead of just these big units controlling the space, you rather have the openness to digital platforms for smaller companies and organizations to develop technology and enter and play within that market, like all the demand side response tools and smart charging and all these infrastructures that we talked about in previous conversations. Now, at least personally within Victor, within our work, we have the global partnership with Amazon, and we have one of the partnerships with Google X in order to design kind of the digitalization. And that's simply because within New Zealand, there's a bit more of this innovative spirit where out of the entire world, those two large giants have chosen a New Zealand company to work with. Our big frustration is the fact that the regulators block our ability to do the innovation because they think we're wasting money. So there might also be an opportunity in this conversation to say, hey, maybe, while we also look at the regulation, let us not use the regulators to block necessary research that's required for us to enter a decarbonized society. And I wonder how that exactly gets worded, but that's definitely a pain point that's preventing us from really pushing forward with like a new future decarbonized energy sector, which could then theoretically scale the world if we get it.
That's an incredibly well-made point, and that's really useful point to come towards the end of this part of the conversation. The issue of the pan-energy sector regulation and specific issue around electricity regulation between the contestable and the non-contestable parts of the business are raised in energy in the industry. We'll be talking about those this afternoon. But it does go to whether, I'm looking at you, Kate, now, whether this is an example of an issue that gets a mention also in the innovation and science space as well. It appears at both places, and it's a very similar discussion, but I think that's what happens, because that is a good example.
So what and thank you for the point, Brigitte. I think it's really, as Toby said, well made. What I'm seeing starting to emerge is potential for the research, science and innovation section of our response to be centred around this idea of taking the recycled ETS revenue and potentially using it to fund an innovation hub at a central level. And that's the big idea that's specific to research, science and innovation, and then potentially drawing in or cross-referencing specific innovation-related ideas from across the other sectoral chapters that would feature in the main in those chapters, but it would certainly, you know, be the chance to cluster them together and raise them up again.
Yeah, okay, that's brilliant. Kate, we'll go around the group one more to see if there's anything else. I think that's been a useful advance for the topic.
Indeed. So last call for questions or comments on that one before we move to funding and financing. I think we'll move on, Toby.
Right. Okay, everyone. Funding and financing. In the previous two documents that SBC produced, the first in October last year, which was a briefing to incoming government on climate action priorities, and the March document, which was the submission to the Climate Change Commission on the Climate Change Commission's draft advice. In both of those, we had quite a tight discussion around mobilising capital with the specific purpose of targeting emissions outcomes. We talked about the fact that in many instances, the externalities or the benefits of decarbonisation are not directly quantifiable in dollar terms, sometimes not able to be monetised. And we also said that there are market failures such as lack of information or high transaction costs holding up potential decarbonisation projects that again government can play a role in compensating for, and the Green Investment Fund is an example of government assisting in this case. So the Green Investment Finance specifically targets projects that suffer because of those sorts of market failures, lack of information and high transaction costs. And here we are again. The Climate Change Commission had raised the issue, and you can see there investigating and developing actions government can take to help mobilise private sector finance, including ways to improve access to low emissions finance for Maori collectives, exploring the extension of mandatory climate-related disclosure regime to cover a broader range of activities, and evaluating the benefits of extending mandatory climate-related disclosure. This document again asks more questions than it suggests answers, and the headline recommendation in the paper that circulated is that government introduce project-specific results-based procurement or financing, support the Climate Change Commission financing recommendations, and comment on the role of government in mobilising capital to target emission outcomes. With all due respect to us, that is still a little bit weak. It's not clear and quantifiable, and it's not necessarily additive to the great discussion on funding and finance. And as I've already said, SBC and CLC have said twice before in the last year, there is a problem mobilising capital and government has a role. I'll be very interested to know, as before, whether this group can help us with some tangible ideas, more tangible ideas, and more additive ideas than the discourse in the Climate Change Commission and in the consultation paper, discussion paper. Kate, I'm opening the floor.
Sure. I wonder if just before we do that, I just wondered about adding a comment in terms of what is and is not in the ERP discussion document in this area. The ERP discussion document proposes no new policies or measures in this area, which we found, to be perfectly frank, a bit of a head scratcher, because there's much that could be done, and probably it refers to work going on behind the scenes, which is not really made clear, and it's hard to know exactly what that looks like. We know that there are many others, or there are others doing lots of good thinking and good work in this space. Most notably, what was the Sustainable Finance Forum and is now the Centre for Sustainable Finance, where they've mapped out obviously the 2030 roadmap for a sustainable finance sector in New Zealand. And I know that they have made some quite detailed recommendations to government about specific measures they should take, and they will be framing up a submission along those lines as well, which we will be looking to coordinate with them on and supporting their points as necessary. So it's potentially just a helpful context to know that we are working with others who have quite significant expertise in this area. But if there are specific SBC CLC points that we want to frame up in this chapter, then we, beyond what's in front of you, as Toby's outlined, then we are absolutely open to hearing from you on that.
Now, when we did the first piece, we had, was it Dean Spicer from ANZ was very active. He was very helpful, but it really was in terms of framing the challenge rather than necessarily what could be done to unlock mobilising capital. And I think, I'm just looking at these names. I don't recognise all of these names. Is there anyone here from the banking and finance sector who'd like to comment on the challenges here?
I don't know that there is, Toby. I'm not seeing anyone. So it might be actually, if there is nobody with a strong interest in this, and I will give it a moment after this, in case there is, that we take that one offline and follow up directly with some of the banking members. And like I say, I am talking to the Centre for Sustainable Finance. So it might be that after those discussions, we can do a second cut of this section, but I will give it a beat in case anybody wants to jump in with thoughts.
I think we're done. I think we'll move on.
Yeah, well,
Yep.
this is going to be an extremely efficient workshop. So I think the last section that we are going to talk about is emissions pricing. So I will pass it back to Toby to talk about that section.
Thank you. And my colleague Karina comments on the call and could come in at any time, or I might throw a question to her. This is, I'm very, very interested to hear what everyone has to say about the emissions pricing. So there seems to be two limbs to the Climate Change Commission's advice and the references in this document now. The first is this idea of a default price to be used for business decisions. And you can see there, the Commission had suggested that a value of $140 per tonne in 2030 should be used on the basis for investment decisions in government and local sector. And so that idea of, it's not a default price path, it's a how to think about a price that you should base investment decisions on, as distinct from the Climate Change Commission's recommendations that the boundaries around the carbon auctions should be moderated in the way that you see there on the chart. So there's putting the cost containment reserve at a particular level and escalating at a rate, and putting the reserve price at a level, putting it at a rate, and it produces this chart. Just bear with me, I'm going to make that larger so everyone can see that, because it's quite a lot of detail. Now, I'm expecting everyone has seen this chart produced by somebody in one shape or another. Actually, I'm not sure. I'm just going to check here to make sure that that's, the framing of that is right. I can see it appearing on another screen in my office, so I'll just change my system so it's only one display. And that way there'll be no. Right. So can you see that chart titled emissions pricing? I'm taking that as a yes. So what we see is the historic price through to 2019, and then we see the pathways under the current framing in the bold lines. And so the orange, so if you see the three orange lines at the bottom, that is where the boundaries around the auction prices were set. And so the middle line there was what the modelling outcome might be of the emissions pathways out to 2035. Those mechanisms you saw on the last chart would increase the floor as per the green lines. The floor, where my arrow is indicating, the cost containment reserve, where at the top, and the model path. And this is what gives you this idea of maybe $140 in 2030. I've overlaid this in black with where the emissions price has gone from early 2020 to today. So that's, and you'll see it's gone from $22.50 per tonne before the Climate Change Commission had started doing its work, to $65 today. And that suggests that the market is expecting to go through the higher side of the boundaries set out in that diagram. The upshot of all of this is it shows that the emissions pricing path could become quite aggressive, that $140 is sort of indicative of where you'd get to by 2030, and the preparedness for the market to build those prices in as soon as the discussion is had. So my question to this group is, are you comfortable with the idea of a default price in 2030 of $140 per tonne for investment decisions? Are you comfortable with the mechanisms that the government adopted, which had been originally recommended by the Climate Change Commission? And is there anything else that you would suggest that SPC and CLC should now say about the government's treatment of the ETS emissions price that would advance the reduction in emissions over and above what's already built in to that set of measures? That's a question. I'm throwing that to the floor.
I suppose one angle on all of this, Toby, that I've heard raised a number of times actually, both during this process and prior to it, is that business is really struggling to have certainty about what sort of a carbon price it should be planning for, and what members can factor into their business cases and therefore investment decisions. And that is, I guess, against the background of all of this and where it might go, based on your very, very robust analysis there, and the context, and this might be where you're coming to, Toby, so apologies if I'm jumping the gun, but why we've landed on one of our headline recommendations in this area being that encouraging government to work with business to develop a shadow carbon price, so that there's, even if there's not complete certainty, which we appreciate there never would be, or could be, that at least there is some element of benchmarking, which I think was raised on the call earlier. So I just wanted to provide that angle on it too.
Yes, and I see that the certainty, I can see why businesses would want certainty. What we said when we did the Productivity Commission work before the 2000 Act is we advised the Productivity Commission work that the carbon price would have to be 130 for meaningful decisions to be made solely in response to that incentive in the electricity sector. So that was a way of thinking about the carbon price and saying, well, what does it have to do? What does the carbon price have to be before you get removal of fossil fuel generation without any other sticks or carrots? And we were unsurprised to see this idea of 140 coming up as a price that's required to drive the investment decisions where they can be made to reduce emissions. Whether it's 130 or 140 or slightly higher or slightly lower, it's not the point. And I think that's the thing about this $140 is it's the price that it has to get to for all of the flow-on effects to come into business decisions. To understand why they would want to put something like that in, but that doesn't give you certainty in and of itself. But what more does the group think should be done? Should the corridor of prices on the emissions in the emissions trading scheme be narrower? Should you go to a completely different system? I doubt whether the group's going to arrive at that. But I just want to think about what it is that we would say now that we have that $140 still is an idea for investment decisions, and unsurprisingly so. And we have that corridor that's sitting on the screen. What else would SBC now want to say to give yourselves as businesses more certainty? While you're thinking about that, there is a last slide, I now recall. I went through the Climate Change Commission's advice, and it's sort of a bit out of date now. The third dot point there refers to progress in developing an approach to incorporating shadow emissions price in the government decision making. So the SBC headline recommendation that sits in the current document reads simply, provide certainty on the projected price corridor for NZUs under the ETS by working with business to develop a shadow carbon price to inform investment decisions. Does this group want to say that, or does this group want to say something else or more? Is it that people don't want to talk about it in front of everyone else?
It might be, Toby, given the nature of the cross-cutting nature of the discussion and the fact that we've jumped around quite diverse topics, that people may have joined out of interest in relation to one of the specific topics, and this might not be it.
Well, it seems to me where I would land in the absence of a sort of explosion of contributions, I think you would leave it at that default, which is the work with business to develop a shadow carbon price to inform investment decisions in the private sector. It doesn't seem like an especially strong submission. It's not necessarily going to lead to additive emissions, but it does actually reflect the subject you talked about first of all, Kate, which is a more close alignment between input and decision making between government and the private sector. Murray Aiken wants to contribute. Murray, come on down.
Thank you. And no, I wasn't asleep. I think the audience here should have more CFOs in it around this question. The point that sort of strikes me is that a lot of businesses, particularly in the freight and logistics sector, will see this as a cost of operation and just add it to their cost book, as you were. And it doesn't trigger the right behaviours until it gets to the point where the business is no longer viable, and they have to then start making some decisions about how do they get into this position and what do they do now. And that, generally speaking, in the freight and logistics industry, you'll find that gets to the point, and transport in particular, where the business has worked itself into a deep, dark corner and cannot trade its way out. And I think the ETS and the pricing we're discussing here will have the same effect, but the smarter people will look at this and go, can we afford to take this on simply as a cost of operation, or should we approach this on the basis, as it's been written, to say that we have to change our behaviours? So the question I ask, because obviously you're asking questions and I don't have the answers here because my CFO is not with me, is the question back to this group is, can we change our behaviours looking at this, or what do we have to do to enforce a behaviour change? Because that's pretty much where we've got to go with this.
Thank you. That's useful.
Thanks, Murray.
just looking at the questions, they ask what emissions price you're factoring into your investment decisions. Do you have sufficient information on future emissions price paths to inform your investment decisions? What are your views on the options presented to constrain? Oh, sorry, that's going to forestry. So the questions really are just, are you okay with what they're doing? And the SBC CLC recommendation stands as providing more certainty around the shadow price. Now, if nobody wants to jump in on this, this is not the last chance. You're welcome to contact Kate or me directly. But if there's nothing else if no one wants to add anything more in this forum, then we would run with that default recommendation, which is with private government clarity around shadow pricing.
And I think just to your point earlier, Toby, that this it's not necessarily additive in terms of mitigation. And it relates to the point that Murray's very well made point about, the people who should be having these discussions. I mean, whilst it might not result in immediate emissions reductions, ultimately, if you have a degree of consistency around the price that is being factored into business decision making, and that price is a realistic one, that has a greater propensity to result in behaviour change rather than, for example, an unrealistically low price that might be factored in at this stage. I would just add that in.
Well, I think that it's been useful in itself just to lay that out there and get a response. And I don't think on the other sectors we had some quite good contributions, but I don't think the draft submission is harmed as a result of this conversation. And because if people objected to it, they would say it. So they're not adding anything, but they're also not saying no, don't do that. So I think, Kate.
No, I agree, and I should say exactly. So we can wrap up, and people can have a half hour of their life back, which I'm sure you're very glad for. What I was going to say is if people have not felt that they have had the right folk in the room or that they've necessarily been equipped to contribute on some of the quite specific questions that have been posed in today's section, do feel free to consult internally and come back to us either with written feedback or, if you'd like, as Toby says, to have a one-on-one or small group discussion. We're absolutely open to that as well. So don't feel that you haven't had your chance to input simply because you haven't had the right material or the right input from your internal folks. So we'll take away what we have heard today and use that to inform the next cut of our submission. But we're always here if you want to have a chat about any part of the submission, either the parts that we've discussed today or any other section. So we will leave it there. Go and have a lunch break, enjoy the sunshine, and thank you all, and talk soon.
Thanks, Kate.
Bye.
Thanks, Kate. Thanks, Toby.
Thanks, Kate. Thanks, Toby.